Great pleasure to bring on board a very dear friend of mine and market veteran, Mark Mobius, live on ET Now. Mark, fantastic to have you back. Thank you for joining us. You know, Mark, I'm always intrigued with the amount you can travel irrespective of pandemic, no pandemic. So before I ask you a question on markets, let me understand which part of the world are you in and what are you observing there when it comes to the third wave?
Now I'm in Munich, Germany. As you know, a week ago I was in Dubai, and next week I'll be in Vienna, Austria. And after that, I can't tell you.
But what you can certainly tell us, Mark, is that why are markets getting difficult and macro pundits are confused? 3 months ago, it was all about inflation, inflation, inflation. Suddenly now there is a growth scare. The consensus view was that the US 10-year paper will rush towards 2, but it is now gradually going back towards 1%. What is happening in the world? Is it growth concern or is it inflation?
It's really neither. It's really China concern. I mean, if you look at the MSCI index or the Chinese index, you'll see it's down. It's coming down. By contrast, the Indian index is going up. So you have a very interesting phenomenon where many people must remember when they think of emerging markets, the first thing they think of is China. So if China is going down, then everybody says, oh my God, emerging markets are in trouble. No, as we can see with India, India is going from strength to strength. So yeah, there are always going to be concerned about inflation, about interest rates and so forth. But the bottom line is that many of these companies in India are doing very, very well. And other companies around the world are doing very well. You must remember, money supply in America alone is up by 30% in 1 year. That means there's a lot of money looking for a home.
Mark, even though there is a rout in Chinese internet stocks, it's not that India has been a large recipient of flows, especially in the month of July. If I look at what foreign investors have done, they may be panicking in China, but they've not aggressively invested in India, at least the data at least based on data which we have for the month of July.
Yeah, that's the problem because, as I mentioned, when China goes down, the emerging market index goes down, and people begin to think, gee, I got to get out of emerging markets. Emerging markets may be too risky. So they start selling India, they start selling South Africa, they start selling Brazil, and so forth. So it's really a phenomenon that takes hold. It's a short-term phenomenon. It won't last for long, but it's something that we have to face.
Mark, how come the sell-off in Chinese stocks is not having a snowball impact? Because all asset classes ultimately they're connected and interconnected. And I remember in 2015 when China sold off because of currency factors, it had a big impact on emerging markets. But this time, like you said, there is a very big divergence. How come one asset fall in one asset class is not having a snowball effect on the other one?
I think it's because people like us who look at companies, look at earnings first and foremost, are investing in a place like India because we see great growth, we see strong companies, and we're sticking to those companies. We're not selling, and therefore you can see their prices are continue to maintain. Now, of course, there'll be corrections along the way. There's no question about that, but it really comes up to the individual investor to make a choice. Are they going to follow the herd and sell out just because China is going down, or are they going to look at the individual companies and countries to see where the growth is?
Mark, what we've seen in India is that companies have, in a sense, reported a subdued quarterly performance because of COVID. Do you think it's time to give companies benefit of doubt and move on?
Yeah, I think the earnings that you're seeing now are earnings that may have been depressed during the COVID situation. Now that we're coming out of COVID, you'll see these earnings pop you're going to see good earnings reports coming out. And of course, those earnings reports will be the end of this year and next year.
So have you changed the number of stocks which you've owned in India? Earlier it was 4. Have you made it 5 or 3?
Right now we have 4 stocks, APL Apollo, Persistent Systems, Polycab, and Metropolis.
Mark, these are not the usual stocks which you like. These are stocks which in a sense are mid-cap. They might have their own niches, but historically you've been known for buying into commodities, you've been known to buying into large cap stocks. How come you've gone down the ladder this time?
The reason, 2 reasons for that. One, when I was buying the big cap stocks in India, I was with Franklin Templeton and we had a lot more money under management. So, so we had to go into the large cap stocks. And many of those stocks at that time were attractive. Now we found that the greatest opportunities are in the small and mid cap.
Mark, let's talk about IT. Since you own Persistent System, this time it's been a blowout performance by large cap IT companies. But unfortunately, most of the IT companies in India are trading at north of 20-25 times, at least 2 years forward. Do you think Indian IT companies and the traditional services companies can still outperform and give double-digit returns?
I believe so, because the emphasis more and more is on technology and the internet. And technology is now becoming more and more important globally. So these companies will continue to outperform.
Mark, Indian market currently has a market cap of $3 trillion, pretty much in size or sync with our economy. If indeed in next couple of years, whether it's 3 or 5, that's debatable, but we certainly will be a $5 trillion economy. What do you think will create the next $1 trillion of wealth for investors?
Well, I think the next big thing will be related to memory and the internet, the cloud, and that sort of thing. That's where you're going to see tremendous growth.
So Mark, my next question is that one side, if I look at Zomato, the Zomato listing of an internet tech company has created waves. From hedge funds to sovereign funds, just about everyone is investing in Zomato. Do you see that now India becomes a very interesting tech play also, because India always had this romance about consumers, and if you put consumer and tech together, then we are looking at very different companies which are planning to go public.
Yeah, I mean, it's 1 billion people, so consumer products, consumer companies will continue to do very well. So that's a growth area, but I must emphasize it must be related to technology.
No, did you invest in Zomato, Mark?
In which one?
Zomato, the big IPO which
No,
went public 2 weeks ago.
No.
Does this entire area of consumer tech interest you? Would you be examining these companies on a case-by-case basis? I mean, the 3-4 companies which are planning to go public in next 6 months?
Yeah, I would. We would look at them, but usually we don't go to IPOs because normally they're very expensive.
Mark, if markets are bullish about growth and if global investors feel that Indian economy is doing rather well and earnings will catch up, then how come the biggest proxy to economy, which is banks, is underperforming?
I think because people are very, very unsure about the balance sheets of banks, given the incredible list of bad loans that have persisted in these banks. People are very uncertain about future earnings and how many write-offs they have to make.
Do you think that makes it a good buying opportunity?
No, it's not very transparent.
You like the diagnostic space, Mark, and you own Metropolis. Do you think the diagnostic stocks have done their bit? Because suddenly diagnostic stocks are commanding P multiples of 60, 70 times, and these are commanding P multiples for a business which is growing at 15% to get compared in the same league with companies like Nestle or Procter Gamble.
Yeah, it's all about growth. What we're looking at is incredible growth in the entire medical and diagnostic area. So Metropolis reflects the potential growth in that area.
Mark, I just want to remind our viewers that Mark Mobius in 1999-2000 said that the internet companies are a bubble and they will fall flat, and that's what happened post 2000. How different are the current internet companies from the dot-com companies? Because dot-com companies were also valued on future growth and no cash flows, and the startup or internet companies are also getting valued on the same with the same kind of imagination.
I think there'll be probably a lot of disappointment because, out of one out of 100 will do very well, but many others will not do very well.
What will it take you to become bearish? What is that one data point which, if it reverses, you would say India becomes a sell or an avoid, and you would like to go underweight? As of now, you're putting your money where your mouth is, which is that you are overweight India, you own 4 stocks, you've been bullish on India, and you've been right. But what is that one data point or a clutch of data points which you're monitoring, which in your book could be the red flag?
It really would come from any change in government policy, any change where foreign investors are not allowed to come in, or the restriction on outflows of money and inflows of money, and change in the reform policies of the Modi government.
So Mark, to understand your view on India, is it a multi-year structural view, and you think the market, which in a sense was born in the throes of pandemic last year, May 2020, still has a couple of years more to go and before?
Yeah, I mean, India is on a growth path. The potential is incredible. And we must look at India not in terms of this year, next year, 5 years, but from a 10, 15, 20-year period. In that time scope, you're going to see incredible growth in India.
Years is a long time. I mean, in today's time when everything is digital and governed by modern technology, and you've Robinhood traders, you would say, who's got time horizon for 15 years? Let's talk about 3 to 5 years.
Yeah, I mean, 3 to 5 years still looks very, very good for India. You must remember there'll be ups, there'll be downs, there'll be problems. But at the end of the day, the growth trajectory will be there. And we must be involved in companies that have good earnings, good solid balance sheets, and are participating in this growth of the Indian economy.
Mark, how come India this time is doing well when there is commodity inflation? Because the story for India is that it's a commodity importing country. It's economy which, in a sense, at a macro level, is centered around oil and dollar. And India may underperform when oil is going higher, but it's the reverse which is happening.
It's a very interesting phenomenon. A lot of people think of emerging markets dependent upon commodities, but that's not the case. What we found is that these commodities will rise and fall, but companies will adjust to these changes if they're running their companies properly. So we found that a commodity change, price change, very often will not have a significant impact.
Mark, I'm going to go back to that conversation or your thought on banks. Do you think that private banks could outperform because of late PSU banks have done much better than private banks. Most of the private banks have been quite clear that, look, we've had a problem because of the second wave, but things will stabilize now.
Well, the problem with the private banks is that the opaque nature of their balance sheets creates real risk. And that's the reason why the public banks tend to do a little better. But even the public banks have this problem of bad loans that are on their books. And it's a very opaque situation. Very often you really don't know what's there.
Mark, how exactly do you think financial markets are pricing in the third wave? Are they pricing in a third wave? Are they pricing in no third wave? What is your understanding?
I don't think they are pricing in a third wave. I think they're ignoring a third wave. They're now looking at an incredible recovery of many economies, and they are now pricing in the growth that they see this year and next year. So they're pretty much ignoring the third wave, even though the headlines are there. But if you look at the markets, it's not having that much of an impact.
Is that complacency or confidence, Mark, that markets are saying no third wave will happen?
No, I mean, it's a matter of earnings, because if you look at the earnings of companies coming out of the COVID situation, their earnings are going through the roof. And there's a recovery psychology that now it's taking place. And that engenders a very, we say, optimistic outlook.
Mark, any regrets that you did not participate in the commodity cycle because you bought Sesa in the past, you bought Reliance in the past when Reliance was a pure commodity play. But this time my understanding of your holdings is that you do not have too much exposure to commodities.
Well, to some extent with Apollo, they are exposed to commodities, but it's really the value added that saves them and really insulates them from these commodity price changes. And you must remember that if a company is dependent upon copper or steel or iron ore, et cetera, they can change their pricing as well in line with these commodity price changes. And very often, actually, their margins could be better as a result of that.
Mark, at what point in time you would say that Indian economy is growing but Indian stocks are expensive? Like we've discussed that a good company does not make a good investment. At what time you would say that for investors who are looking for absolute returns, maybe it's time to switch from India irrespective of the underlying strength of the economy? At what time you would say, look, I'm going to look at other frontier markets because Indian markets are doing well, they've done well, but other prospects of other markets doing better is higher?
Well, we do diversify. As you know, if you look at our portfolio, we're in a number of countries. So you have to diversify because no one knows what will happen in any particular country. But from a long-term perspective, there's no good reason to exit India, simply because, as I mentioned before, the growth prospects are terrific. And you've got a lot of choice. You've got many companies from which to choose. So you may not find one particular company not so attractive because it's gotten very expensive, but you'll always find other things in such a large market that could be attractive.
Mark, I always look forward to interaction and thank you for discussing your India portfolio with us, reasons for outlining that, why you're so bullish on India. And thank you for joining us all the way from Munich. So do take care of yourself and certainly hope to see much more of you.
Thank you very much. Appreciate your time. Thank you.